Hello, my friends. I'm Joshua Coffey, and I'm here to talk to you guys about investing and the power held in investing. Now, when I speak about investing, I'm talking strictly about the trading and holding of mutual funds, closed-ended funds, and stocks. Now, I know there's plenty and hundreds of ways to invest, but those are my personal preferences to investing. I mean, there's penny stocks; those are a little short term. I've invested in penny stocks. I mean, I've lost some money, but I've also doubled my money in some of the time. So it is kind of a bittersweet situation. So if you're invested in penny stocks, that's great. But this video, I'm going to be talking about investing in long-term stocks that pay actually monthly dividend. I have found out many stocks that pay monthly 12 times a year. That's ridiculous. Most companies will pay you once annually, or they will pay you quarterly, which is also 3 months. They pay you once every 3 months just for owning stock. Now that's insane. Just for owning stock, a company will pay you. Now I've come up with a tactic and a formula to create a passive income to the point of making lots of money every single day and every single month. Steady passive income. Now, what I have here is I've just developed a chart with, well, I'll get to the chart later, but what I'm talking about is I've invested myself in different stocks. I diversify my portfolio to the point where I buy high yield dividend and I buy lower yield dividend, just to get an average of about 10% annually. Now, I buy into many stocks that are, say, 16, 19, 12, 11%. They pay you that much annually, and then I invest in stocks that pay 5, 6, 7%, 4% that are more stable. The lower end dividend paying stocks are usually more stable. So I would recommend diversifying your portfolio. If you drop all your money into one thing and that company goes down, you just lost a lot of money. So I would highly recommend not putting all your money into one stock or closed-ended fund or mutual fund. Now, what I do is I diversify my portfolio enough that all my stocks average about 10% a year. My low and my high, they kind of balance out to be about 10%. Now here, I spent about 5 to 6 hours calculating for all my monthly dividend paying stocks, which is wonderful because it compounds monthly, so you actually end up earning a lot more than if it paid you annually. So I developed a chart starting for 2 years, you were to invest $500 a month. Now I know that may seem a little steep. I myself, that's a little more than I can afford, but here in about a year or two, I'm actually going to be investing that much monthly. But just by doing that, you'll be creating an insane amount of money in the long run. So I actually have a friend that invests about $1,000 a month into this, and his portfolio is just through the roof with the amount it's been worth in the past 5 years. But anyways, so I developed a chart, and say for this, if you were to put in $500 a month in a monthly dividend paying stocks, that all your stocks average about 10% a year. If you actually divide the 10% a year by 12, because there's 12 months, it ends up being 0.83% a month. So you're actually making, even though they all average about 10%, they pay you 0.83% a month. Now that doesn't seem like a lot at first, but in the long run, it's definitely going to surpass its worth, and it's going to be a lot. So I calculated out if you were to invest $500 a month into monthly dividend paying stocks, at the end of year one, you'd be making $52.14 a month. Okay, now that may not seem like a lot, but by the end of the year, your entire portfolio will be worth $6,333.71. Now you've only made $333.71 profit, but that's from year one. Okay, so this I would recommend when I talk about dividend investing. I believe strongly in reinvesting your dividends. I never take any of the money for myself. I just reinvest into more stocks, so that next month you just end up getting more and more money. So it's called the DRIP formula. Let me write that down for you guys. Just DRIP. The dividend reinvestment plan. That's what you want to do with all your stocks. You want to take all your stocks and you want to reinvest them in the same stock. You just want to keep it going, so the next month you do a little more and a little more. You create this massive snowball. Now, at the end of year one, yes, you're making $52.14 a month. Yeah, it's a little bit, you start off, but it starts snowballing. Then after year two of putting $500 in a month, you're making $112.70 a month, and your total portfolio worth at the end of the year is $13,690.62. Now, as you can see, it more than doubled there. It actually doubled plus $6 per month. So you're actually making $112 a month. I mean, that's a phone bill and a cell phone bill and like part of insurance. That's insurance for some people. Just an insurance payment for some people, and that is phenomenal. But say after 2 years you get tired and you say, "Oh well, that's a little too much for me. I'm just gonna cut it back a little." For the next 3 years, you put in $250 a month. You just completely cut your investment in half per month. $250 a month. By the end of year 5, you'll be making $234.38 a month. Now that's more than doubled what you would be making at the end of year 2. So it's not bad, especially if you cut your investment in half. But by the end of that year, your portfolio will be worth $28,472.51. It's getting better. And then after that, if you just after year 5, I calculated out you can stop investing, and by year 10, you just completely reinvest all those dividends, and by year 10, you'll be making $629.41 a month. Now that's pretty good for just unearned income, just free money. That's just free money that your stocks pay you for owning them. That's not including stock appreciation. When the price goes up and you sell out, you can maybe double, triple, quadruple your money by the time then. So, and at the end of that year, you'll have $76,461.52. That's how much your portfolio will be worth. Now, by the end of year 25, just strictly reinvesting all of your dividend payouts, your portfolio, you'll be making $3,027.23 per month. Now, that is, of course, a lot better. Now, for me, I'd only be age 43 by then. Now, I'm assuming I start next year doing $500 a month for the first 2 years. So by then, I'll be 43 years old, and my portfolio would be worth $367,754.10. Now, that is phenomenal. By then, by the time I'm 43, if I make that much money just strictly from dividend payout, of course I wouldn't take it for myself. I'd reinvest it for maybe the next 17 years until I'm 60, so that by the time when I retire, this will actually be worth over $1.5 million. Now that is what I'm talking about, you guys. And the best thing about dividend, get this, tax, when you sell out and you make capital gains on stocks like day traders, you're taxed at a 35% rate for any capital gains. Now the amazing thing about dividend is you're taxed for a mere 15%. 15% of your dividend you have to repay to the government in tax, which that is amazing. That is less than half of what you would pay if you were trading constantly. If you're just buying stocks and selling out, you'd be paying more than twice as much. Now that is phenomenal. Now imagine if you up this 500, say you kept this 500 for 5 years, this would probably be worth about $750,000. You'd be making way more money. Now I know that these charts are pretty accurate because I spent at least 6 hours calculating this. I have about 6 to 7 sheets of paper that I calculate all this stuff out. But you know what? I would highly recommend dividend investing. If you haven't been involved in it, I would start researching it right now. You know, this is amazing. The stock market is actually starting to come up. For the past 3 months, we've actually been in a recovery from this recession in the U.S., if that's where you're from right now. That's where I'm from. In the past 3 months, we've been in a recession. We've been in a recession the past 3 months. We've been having a recovery. The stock market has been going up since 2009 slowly, so we're coming back, and I would highly recommend you get involved now, because here in 25 years, if you're investing more than what I can, you're going to be making a killing. Joshua Coffee, if you have any questions, you can go ahead and just subscribe to my blog, my email, shoot me an email. I will answer it as soon as possible. Good luck to you guys. Thank you.